Thank you and Happy New Year, my stock market jobbers. So, I think over the next week or so, the first week of January, we're going to get a really good idea of which way the market's going to go over the next month or two. So, by watching the next week, we might get an idea for the next month or two. Sometimes trading is easy, most of the time it's not, but sometimes the market sets you up with real signals. Now, or I should say clear signals. Now, the worst traders, the ones that fail, are the ones that try to guess which way the market's going to go. People always say to me, "Oh, do you think the market's going to go up? Do you think the market's going to go down?" I know it's fun to talk about, but I don't know. I don't have a crystal ball. I'm not Nostradamus. The best traders watch the market and let the market tell them what to do. And the market speaks a language. And what is this language? Well, the language is how does the market or different parts of the market react when it gets to or when they get to important price levels. These levels are supply or resistance levels. And just, real quickly, if something gets to support and it doesn't break down, there's a good chance it bounces. If something gets to resistance and it doesn't break through, there's a good chance it goes lower. So we're going to look at five of the biggest and most important stocks in the market. And even if you're not a market guru, you will see that we have things that are clear levels. And these stocks are going to talk to us over the next week or so. Okay? So this is what we're going to be watching. So make sure you come back here to stockmarketjobber.com. So first on the list, we have Apple. This is the biggest stock in the market based on market cap. Now, a fundamental principle of stock markets is levels. When markets are going down, levels that were support convert into resistance. Okay, it happens because of buyer's remorse. People that buy, like for example, this was support here. People buy and the market went lower, and then a lot of the people who bought said to themselves, I made a mistake. I want to get out. They experienced buyer's remorse. You could say the same thing happened here. Look, people bought there and they sold there. And this uh, dynamic of support turning into resistance is a function of, or is a characteristic of a market that's going lower. So Apple found support back here, and sometimes these support and resistance levels can remain intact for a long time. Now Apple is trading below this level. So if support converts into resistance here, that's a sign that's going to tell us there's a good chance the market goes lower. Remember, in markets going down, there's buyer's remorse, right? I guess it makes sense. It's not Einsteinian physics. People buy, the market goes lower, they regret buying. A lot of people tell themselves, hey, if this gets back up to where I could get out at break even, well, I'm going to go ahead and do so. So here is stock number one, or I would say dynamic number one to watch. Will support and Apple turn into resistance? If so, bearish. If not, bullish. Next thing we're going to look at is Amazon. All right. Remember big tech? Well, Amazon was part of it, even though in reality, Amazon is actually in the consumer discretionary sector. But there's something that we call market memory. And that refers to specific levels that are important. A support level is a level where there's more buy orders or buy interest or demand than there is supply order or sell orders or supply. All right. So when markets are going down, it's because the buyers, I'm sorry, the sellers can't find anyone who's willing to pay the price they want. So they're forced to offer their shares at a discount. All right. When something gets to a support level, the tide turns. There's enough buyers or demand or buy orders to absorb all of the supply. And there's something called market memory. And that refers to the fact that sometimes these levels can retain their importance for a long time. And look at this back in 2019 and early 2020, Amazon found support around 81.50. This is the COVID low, and that's where we are now. All right. So there's a good chance that this either stages a significant rebound or it breaks down. I know you're like, yeah, you traders are all like, blah, blah, blah. If it does this, it does this. If it does that. Well, the astute traders don't guess. When you come to a fork in the road, the astute traders don't guess which way you're going to go. The astute traders wait and see which way the market's going to go. They might miss the first few points, but they'll jump on board for the longer trend. Okay, and we can even see here another dynamic, right? Look at that. Support turn into resistance. People that bought here regretted buying, so they decided to sell if they could get out of break-even. Support became resistance. And also the other thing we see here is support or a resistance level can stay intact for a long time, longer than you would think. Up here we had resistance, and this is, I think, probably June of 21, and this is probably October. So there's another market memory, but we don't want to focus on that right now. But we just want to focus on, will Amazon hold this level? So if Amazon holds, Apple reverses, bullish. If Amazon doesn't hold, Apple breaks down, bearish. It's pretty simple. You don't need to overthink it. I've been doing this for a long time, and I've learned over the years that you just keep it simple. You don't try to overthink it, ignore what the gurus are saying on the news. Here we have resistance turning into support for Tesla back in 2020. Why would resistance become support? We've talked about why support would become resistance, but resistance becomes support because of seller's remorse. Investors sold, and when the market went higher, a lot of them say, I made a mistake, I shouldn't have sold. I'm going to buy my shares back, but I'm only going to do so if I can get them for the same price I sold them at. If there's enough remorseful sellers placing buy orders, the level that was resistance turns into support. Just like the opposite dynamic, if there's enough remorseful buyers placing sell orders at the level they bought at, the buyer's remorse will turn what was support into resistance. But here we have market memory, and I recommended this trade a few days ago. You can believe me or not, but just check out the site. But I said when Tesla gets down around 110, it's so oversold. There's a chance we see a move higher, and it jumped about $10. But regardless, this is just something else we need to watch going into the new year here. Again, my emphasis is that it doesn't need to be overly complicated. At Stock Market Jobber, we just focus on simple principles, right? One of them is some price levels are more important than others, and another is levels that are support or resistance that are important can shift back and forth. Resistance became support, right? You can see it almost any chart. Support became resistance. But let's just focus on the next week and what happens with Tesla and the 110 level. I like these transitions. Check this one out. All right. Remember Microsoft? Doesn't seem like anyone talks about it much lately. I don't know why. I guess the media is obsessed with Elon Musk and Tesla and scam Bankman fraud. But here we have support turns into resistance. People bought. They thought, oh, gee, I bought it at 240. Now it's at 260. I'm a genius. But they didn't sell and they held on to it, and now it's at 238. A lot of the investors who bought at 240 say, I made a mistake. I need to get out, but I don't want to lose any money. So here's what I'm going to do. I'm going to try to sell my shares at the same price I bought at. Buyer's remorse leads them to place their their sell orders at the same price that they had their buy orders, so they can get out of the position without losing money. So it's not an uncommon thing in markets and it doesn't matter what market it is, stocks, bonds, cryptos. It's this chart is showing us human psychology. A lot of people think like, oh, you're a technical analyst, which, by the way, I hate that term. I call myself a market equilibrium analyst. But a lot of people say like, oh, charts are just like astrology and blah blah blah. And for most of the for the most part, they're right because most people that are technicians really just don't know what the hell they're doing. It's not about looking for magical patterns. It's about looking for what does this tell us about supply and demand dynamics. And this particular chart here tells us that there was enough buy interest back here to keep the stock from going lower. But eventually it broke down or broke those levels. And now a lot of these buyers are remorseful. So they're going to try to sell and get out. Buyer's remorse can turn a support level into resistance. All right. Not rocket science, not astrology, just common sense. And that's why you should check out Stock Market Jobber, because we don't worry about esoteric, strange things. We just focus on market principles. And as someone who spent 20 years in the institutional trading world and who literally trade with shoulder to shoulder with some of the greatest traders in the history of trading, I can tell you that this is what they're focused on. They're not coming up with magic secret systems, Fibonacci, Gann. All right, so I think I got one more thing to take a look at here. And this would be Berkshire Hathaway. And we can see this phenomena here about very clearly illustrated about the whole concept of how some levels are more important than others. Resistance became support. People sold. All right, actually, I said that backwards. So people here buy at resistance. The market goes lower. And when it gets higher, all right, let me start again. I got this confused. All right. So I'm sorry, it is New Year's. All right. So seller's remorse, forget everything I just said. Seller's remorse can turn a resistance level into support. So people sold here. When the market went lower, they thought they made the right move. But then when it went higher, a lot of these people tell themselves, hey, I made a mistake. I shouldn't have sold. I want to buy my shares back, but I only want to do so if I can get them for the same price I sold them at. So we have remorseful sellers placing buy orders at the same price they sold at. What happens here? Well, the level becomes support and then the market goes lower. Now we have remorseful buyers who want to get out of their positions at break even, so they place their sell orders at the same level that they bought at. If there's enough of these sell orders, the level that was support can turn into resistance. So these are 5 stocks to watch. I think over the next week or two, they'll probably tell us where the market's going to go for the next month or two. StockMarketJobber.com looks at and focuses on simple principles. What are the price levels that are important? What are the trends? What's the momentum and investment psychology? And if you stick with that, you're going to be able to learn how to be a successful trader. All right. Thank you, everybody. I look forward to seeing you soon. Happy New Year.